This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on May 15th of Friday, 2015. Our time is 8:45 Mountain. We are on earlier this Sunday due to NHL playoff hockey coming up later on 6:30 CHED. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Learn about investing in hard assets, diamonds, gold, and silver. Harold has an auction site. It's hsfineauctions.com. And don't forget, if you ever miss a radio show, we have them streaming live on Harold's two websites, rarecoloreddiamonds.com and HESradio.com. We have a podcast through iTunes. Go to iTunes, type in The World Financial Report on Radio. You'll find our podcast there. We are portable. We go anywhere your portable device does. And don't forget, get our free weekly newsletter. The newsletter this week is packed full of good information. You can get it by connecting with Harold at rarecoloreddiamonds.com or calling 1-800-432-1022. In the news this week, global debt now stands at $200 trillion. We will talk more about that after Harold does his commentary. Also, unfunded pension liabilities for Illinois, the public retirement system for 2014, stand at $104.6 billion, a staggering number. HSBC warns the world economy faces a titanic problem. If we have a recession, really, there's not much Feds around the world can do because they've pretty much done everything they can already. In Greece, it's getting quite dire. The GDP fell back into recession, contracting by 0.2% for the first 3 months of the year, and that's the second quarter, meaning a recession. Depositors are fleeing Greek banks. Deposits down 20% since September, and they have pulled out about $7.8 billion in the last month, leaving $131.6 billion in the system. Greece tapped a reservoir of money that they had put aside with the IMF. That paid off some of the loans and money they had to pay here just recently, but they need to pay that money back in the next 2 weeks. Also in New York City, art sales in New York were just a huge success. In fact, 10 pieces brought in $1 billion. There was a watch sold for $5 million. Christie's and Sotheby's in Geneva had sales. There were 2 pink diamonds sold. We'll talk about that a little later in the show. In fact, our featured diamond of the week from rarecoloreddiamonds.com is a pink diamond, Harold. It's a 0.46 carat, heart-cut, fancy intense, purple pink argyle. My favorite diamonds that we feature are the heart-cut. They are spectacular. And if you're a guy and wanting to propose, invest in a diamond like this, have it in a ring setting, and tell me there's no woman that would refuse your proposal. It is a stunning diamond, 0.46 carat, hard-cut, fancy intense, purple pink argyle. You can see it at rarecoloreddiamonds.com, featured diamond of the week. But Harold, it was a very, very busy week. Gold and silver have done very well here in the last couple of weeks. We're seeing hard assets, whether it be cars or watches or art, diamonds, all doing well at auction.
You better believe it. That's very, very exciting. And we did have a strong week in the commodity markets. Actually, gold and silver rallied very, very strong as the U.S. dollar fell back on profit-taking. And basically, we saw a very strong week where gold has traded actually as high as $12.25 this morning. It's been a little lightly traded, but gold's actually up $1.60 as we're trading the show. In fact, the market's been up pretty well every single day this week. Now, if you look back in history, over this next month, cyclically, it's a good time for gold and silver. So basically, because we're going into the very slow months of the summer. So gold is trading at $12.24 right now. We'd like to see 2 closes above $12.25. That would make the prices go closer to the $12.40 level. But again, that a lot of that has to do with what the U.S. dollar is going to do. Silver has also made a very strong move this week, trading at 17.58, did trade as high as 17.65 this morning. Now, the reason that the market's backed off in the U.S. dollar is that it's met resistance twice at the par level and has not been able to break above that, so there's some profit taking, and the market dropped down to about the 93.5-cent level that it's at right now. We do anticipate that the U.S. dollar will strengthen again, especially during the summer, but at this particular point, we've had a strong week in the gold and silver markets. Oil still trading below $60 at $59.09, but again, the oil market has also made a strong move over the last couple months. The newsletter this week, you got to get it. It's loaded with very important information, and there's so many things happening in the world right now that we really need to pay attention to. First of all, how crazy is this? The Dow is sitting at record highs as retail sales are extremely weak, and the unemployment numbers are a joke. So basically they're saying that U.S. retail sales hint at recession. Weakest since the financial crisis. Despite bouncing back last month at a faster rate, April just printed the lowest year-on-year growth since November of 2009 at just 0.09%. Retail sales have still missed expectations for the last 4 to 5 months. So the retail sales numbers have been horrendous, and the Dow is hitting record highs. Then on top of that, the job numbers came out last week, and again, they made them look extremely bullish, but if you look at the actual numbers, the part-time jobs soared by 437,000, but full-time jobs tumbled and stayed firmly under pre-recession highs. So how in the world is that possible? How is the Dow hitting record highs when retail sales are not good at all, and everybody knows that the job numbers are horrendous? Who needs part-time jobs at this point? People need full-time jobs, and they're just not available. So it's a crazy thing. But again, we don't put a lot of credence in what the Dow is doing at this particular point because, again, it just doesn't make any sense. If the Dow is representative of the U.S. economy, it should be trading closer at 10,000, certainly not hitting record prices at 18,000 as it had this week. This is crazy. What's happening in Europe with the banking situation is absolutely frightening. So now they're saying that governments around the world are basically looking at what's happening in Europe, and right now we're looking at a situation where if you keep your money in the bank, they're actually charging you interest. In actual fact, let me find this because it's in the newsletter. It's one of the most important things that we're looking at, and you've got to read what's happening with the world banks because, especially in Europe, it's an unbelievable situation. Again, the newsletter this week is just absolutely loaded with extremely strong information that you need to read if you're going to be able to make the right moves financially, because I'll tell you, we are one situation away from the markets imploding, and that could actually happen this year because what's happening in Europe and what's happening here in the United States, and in actual fact all over the world, because China is financially in as much trouble as anybody is. In actual fact, what's happening in China, especially with their real estate market, is absolutely frightening. So you've got to get the newsletter this week because there's so much information in there about what's happening in the banking sector. And again, it's quite frightening to think that you can keep your money in the bank, they're going to charge you interest on it, and then on top of that, you're not allowed to take hardly any money out of the bank. And if you're paying any type of cash transactions, you're in even bigger trouble because they're going to report you to the money laundering government people that, again, are going to come after you. So it's just an unbelievable time. And again, to see that you can put your money in the bank, they're going to charge you interest and then report you if you're paying out more than $5,000 to $10,000 per month in bills. So it's a frightening situation. What's going up most at this particular point are alternative assets. Alternative assets is where the big money is at this point, and as Randy brought out at the beginning of the show, what's happening at auction right now is almost unprecedented. The prices that were realized for pink diamonds at auction, at the last auction, were unbelievable. Watches going for $5 million, art going for over $150 million. It's an unbelievable time, and again, it is definitely the time to be an alternative asset. And also, there's very strong feelings that with China amassing as much gold as they have, and they've bought unbelievable amounts of gold, that the feeling is that gold could not only break $2,000, which we almost did back in 2011, but on top of that, they're talking the gold price could go to $10,000 or $15,000 an ounce. And it's not inconceivable that that could happen. So the other thing that we brought up last week, we talked about J.P. Morgan actually amassing such a massive amount of silver. Evidently, they're doing the same in the gold market, but the numbers were way off. You know, they were saying that J.P. Morgan may have amassed as much as 55 million ounces of silver. Now they're saying the number is closer to 300 to 500 million ounces of silver, which is a really unbelievable situation, seeing that it was J.P. Morgan that really has been the major catalyst for bringing down the price of silver. And now we're finding out that they're doing it for their own benefit. So every time they brought down the price of silver, especially the biggest drop of all, when silver dropped from 50 all the way down to 14 and change, during 2009, back in 2011, now we're finding out that not only was J.P. Morgan behind those massive drops by shorting the market and instituting selling situations that plummeted the market, then they actually took physical delivery of the silver, not only for themselves, but for some of their clients. So they've actually amassed a massive amount of physical silver, and it's absolutely shocking to think that this has happened, realizing that it was J.P. Morgan that was more than likely behind all these massive sell-offs, and now we're finding out that they've been taking physical delivery of these silver contracts, both in ETFs and in futures contracts, and has amassed almost 500 million ounces of physical silver. Now, obviously, if they're doing that, they're anticipating that the price of silver is going to skyrocket in price. They're going to make billions and billions, hundreds of billions of dollars on this move in gold and silver. And that's why they've done this. Now, they're going to have to figure out how they're going to be able to sell the silver back into the open market. And again, the only way that I can see that actually happening is if the market is rallying on a very strong basis. So again, we do anticipate that we are going to see massive moves coming in the gold market because of shortages in gold and similar situations to what we mentioned in silver. But then we also imagine that the same scenario is going to happen in silver as they've amassed 300 to 500 million ounces of silver. Randy, it's really an unbelievable time as to what's happening in the world markets. And you and I talked before the show. I think we're firmly convinced at this particular point that we cannot see the Federal Reserve raise interest rates because it would wreak havoc on the financial markets, and that could be the one catalyst that could send the markets absolutely plummeting, is a rise in interest rates. And we do believe that a rise in interest rates will not only hurt the real estate market and the stock markets in the United States, but the market that will be greatly affected will be the derivatives market, which is in the quadrillions of dollars and could bring down the whole financial economy as we saw back in 2008. So again, Randy, the feeling in the markets at this point is of almost fear, waiting for the shoe to drop and figure what's going to be the next major catastrophe. And again, I think it's right in front of us that if the Federal Reserve is stupid enough to raise interest rates, I think all hell is going to break loose in the financial markets. You'll see stocks plummet, possibly down below 10,000, which it should be at this point anyways. We will see the derivatives market actually fall out of bed, and we could see the price of gold and silver and other hard assets absolutely skyrocket.
Ted Butler, who is a silver expert and analyst, has written an article this week called The Biggest Silver Haul in History. And he talks about his thesis that J.P. Morgan is cornering the silver market. It's his belief they could have in excess of 500 million ounces. He says conservatively 350 million ounces. Get our free weekly newsletter. There are people that have opinions on what Ted Butler's saying. You can read exactly what Ted is saying in that article, the biggest silver haul in history. Get it from Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or connect with Harold at 1-800-432-1022. Get your name on the list for our free weekly newsletter. We send it out via email every week. You can go through it in 5 to 10 minutes on any portable device you have, or you can spend hours if you want. It's the companion to our radio show, and it is a must-read every week. You're going to be seeing exactly what Harold and I are, and you'll know what we're talking about. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. And before we get to the story I wanted to touch on about the world debt, because that is a serious, serious concern. Our featured diamond this week from Rare Colored Diamonds is a .46 carat, hard-cut, fancy, intense, purple-pink argyle. Speak with Harold about investing in this heart-shaped diamond. We'll talk more about the two sales at in Geneva. Christie's and Sotheby's had auctions this week. We'll talk later about those auctions and give you some results. But one of the things that I think is a huge concern, and there will be a day of reckoning coming, global debt, now $200 trillion. The McKinsey Institute says global debt is around $200 trillion and unsustainable. We have that article in our newsletter. They say total global debt is $27,204 for every person living today, almost $30,000. Almost 29% of that debt, $57 trillion, has been accumulated in the relatively short period since the financial crisis erupted in 2007, just 8 years ago, almost a third. All major economies have higher levels of borrowing relative to GDP than in 2007. Three risk areas include rising Chinese debt, government, and household debt. The debt report ignores U.S. unfunded liabilities of over $100 trillion. We know that Professor Lawrence Klotnikoff, a professor in the United States, has come out and said that he believes the United States has unfunded liabilities of $200 trillion based on Medicare and Medicaid and Social Security. They also go on to say major cause of risky and unprecedented levels of debt, QE, and ultra-loose monetary policies not acknowledged. The risk of a new global financial crisis could hit, and that would mean wealth taxes, currency wars, devaluations, and bail-ins. And this dovetails into a story that came our way this week from Bloomberg. America's future got $7 trillion worse since the financial crisis. In fact, they go on to say, driven by higher interest costs, Social Security and Medicare, Medicaid for baby boomers, as well as tax cuts made permanent in 2012, the federal debt held by the public is expected to hit $40 trillion in 2035, according to calculations by the CBO. Back in 2009, after U.S. President Barack Obama took office, the forecast for 2035 was at least $7 trillion lower. In 2035, the debt would almost equal the size of the U.S. economy. 4 years later, it will match the previous record set in 1946 at 106% of gross domestic product, the CBO estimated last year. Compare that to the 2014 debt burden of $12.8 trillion, or 74% of GDP. The economy just isn't growing fast enough to keep pace with the cost of caring for the soaring ranks of elderly, and the discrepancy between spending and revenue is estimated to widen in the next few years. And if you take a look at the chart that we have in our free weekly newsletter, federal expenses will grow faster than taxes in the United States. And that will happen. It will start this year and continue all the way to 2045. You can see that the total spending and the revenue that is brought in will not even be close to each other. Harold, we had the story off the top. Pension fund liabilities in Illinois, $104.6 billion for their public retirement system. There is a day of reckoning coming. And we're not trying to scare anybody, but we are trying to say that it's something you should be aware of when you're investing. If you're not aware of it, you obviously risk having some serious ramifications with your portfolio if we are even just 50 or 25% right, because something will need to be done about these numbers. They are just not working in anyone's favor. So now is the time to, we believe, have hard assets, gold, silver, diamonds, and it's an insurance policy in your portfolio, an insurance policy that you need there at all times. Harold, we have approximately 3 minutes left in our segment, but you look at what's happening around the world fiscally and geopolitically, and everyone needs an insurance policy, and now is the time.
You bet you do, Randy. And it looks like we're going to have to do it ourselves, because the way the decisions are being made for us, again, it's just too frightening to think. I did find the article that I was talking about. It says governments around the world are making it more difficult to save and transact with cash in the latest attempts to financially suppress their citizens. Their goal is to force citizens to deposit cash and charge interest, as well as having total control over the money on deposit. In France, individuals will not be allowed to make cash payments exceeding €1,000. Additionally, cash deposits and withdrawals totaling more than $10,000 per month will be reported to the Anti-Fraud and Money Laundering Agency. Spain has prohibited cash transactions over €2,500. In Sweden and Denmark, the use of cash is being steadily eliminated. In Israel, individuals and businesses are still allowed to make small cash transactions, but eventually all transactions will be converted to electronic forms of payment. So if this is happening in Europe, it's going to be happening here also. And this appears to be the route that the banks are going. Total control of our money, and again, not paying us anything for it. Where does that leave you? Where does it leave people as far as, us that do things on a more conservative basis? So again, if this is a sign of the times, and it certainly appears to be, we really need to be smart about it, because again, having everything that you have in cash or paper is certainly not the way to go. It's obvious by reading the reports that we've read this morning that having cash is not the way to go. Having hard assets that could be sold in other currencies is the way to go. And believe me, a lot of the auctions that are going on at this point are going on in other currencies. So again, this is something that we brought you a long time ago. When we got into the diamond business, we built an auction business for you that could be sold in other currencies. And again, it turned out to be, I think, an extremely smart move, because again, judging by what's in the newsletter this week, it appears that cash is no longer king. And again, if they're going to do away with cash or try to do with it, it's really going to send some panic through the markets, and we want to make certain that our clients are not the ones that are affected negatively by that. So it's a frightening situation, Randy. A lot of things in the newsletter this week are very important to read, and again, I'm hoping that everybody listening gets this week's newsletter.
Connect with Harold at rarecolorediamonds.com or call 1-800-432-1022. Going to come back and talk about the weekend diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on May 15th of Friday, 2015. Our time is 9:10 in the morning Mountain. Radio show normally runs Sunday at 3 on 630 CHED. We're on in the 11 a.m. hour due to NHL playoff hockey coming up later on this morning on CHED. In fact, I guess it's early afternoon at 1 o'clock, so you can listen to the game a little later on. It's the May long weekend. Hopefully everyone will enjoy the long weekend. Connect with Harold at rarecolorediamonds.com. rarecolorediamonds.com. Learn about investing in diamonds, gold, and silver. rarecolorediamonds.com, 1-800-432-1022. Get our free weekly newsletter. We'll be happy to send it out to you. Our featured diamond of the week is a 0.46 carat heart-cut, fancy intense purple pink argyle. These diamonds, when they're done in the heart-shaped form, are miraculous. They're just a vision. They're just so stunning. If you want to take a look, go to Rare Color Diamonds, click on Featured Diamond of the Week. You'll be very impressed with this hard-cut, fancy, intense purple-pink argyle. It is absolutely stunning. This week, Princess Matilde's pink diamond sold for $15.9 million. And an 8.72-carat pink diamond, ring believed to be part of a collection owned by Princess Mathilde Bonaparte, sold at auction for that $15.9 million, as I mentioned, at Sotheby's, Geneva. The auction house said the historic pink diamond only recently resurfaced after sitting in a bank vault since the 1940s. We also had another sale, and that was Sotheby's. So we had Christie's and we had Sotheby's, and they had a sale as well. And it did very, very well. We have a story in our free weekly newsletter. They sold Jackie Kennedy Onassis's Van Cleef rubies. They fetched $302,000, and there was a pink diamond that sold for $10 million. And there was a world record for a cashmere sapphire. And we'll run down some of these numbers after Harold gives us his weekly commentary on diamonds. But Harold, we look at what happened in the art market, the watch market, the diamond market over in Geneva. It was a very good, very strong week for hard assets.
Absolutely exciting. That pink diamond, oh my God, to have a pink vivid diamond like that is just amazing. And just look at the prices, how much pink vivid diamonds have increased in price, Randy. I mean, that diamond sold for right around $2 million a carat, or a little bit over. So it's just a sign of the times. Again, the smart money is going into alternative assets. Paper assets, as we read, some of the reports this morning, are suspect. And the fact is that, to keep all your money in the bank right now doesn't make any sense anymore. So to be diversified and to have assets that are not paper assets have never been more important than it is right now. So we're very excited to see what's happening in the auction markets and in the hard asset market, especially with diamonds, because that's our main business. So the diamond market is on fire and will continue to be as supplies continue to dwindle, and the need for higher quality diamonds there's hardly anything available. So just like what's happening also in the classic car market, Patek Philippe watch sold for over $5 million. I mean, these are records, and again, just prove that that's where the smart money is going to, into hard assets. Again, we anticipate that the price of gold is going to skyrocket. We think that silver is going to skyrocket, especially with the news that came out on J.P. Morgan. The results that are coming from these auctions are just amazing. And again, it's only going to get better and better, especially in the pink diamond market, because we all know that most pink diamonds come from the Argyle mine. The Argyle mine is going to close in less than 5 years. And at that particular point, we are looking at possibly one of the biggest returns on investment that we've ever seen. I think that the price of pink diamonds, of vivid pink diamonds especially, could increase 1,000% over the next 10 years. And there's no other asset that we know of in existence today that will outperform what pink diamonds are doing. So, again, they're becoming more and more difficult to get. Argyle is closing because they're not producing enough diamonds to keep the mine open. We've seen similar situations happen in blue diamonds, where back in 2005, a vivid blue diamond sold for $200,000 a carat. Today, a vivid blue diamond sells for $2 million a carat. So those are the type of returns that we anticipate seeing in the market over the next 5 to 10 years. Now, it's important that you understand that you don't buy a pink diamond or a diamond today and look to sell it in a couple of years. It's not that type of investment. It's a longer-term investment. The longer you own it, the more and more it goes up. A lot of our clients buy pink diamonds and yellow flawless diamonds and blue diamonds primarily for retirement. For 10, 15, 20 years from now, a diamond you can buy today for $50,000 could be a $500,000 diamond. In fact, we anticipate that the price of vivid pink argyles could increase as much as 1,000% over the next 10 years. We think that as soon as the mine closes, gives it 2 years for all the diamonds to run out, and we think that the prices will absolutely go ballistic. We also are seeing similar price moves in blue diamonds. In fact, blue diamonds are extremely difficult to get. We have a magnificent blue diamond ring. It's almost a half a carat. It's intense blue. It's a flawless. It's a pear shape, and it's in a ring setting that is surrounded by small pink diamonds known as millies. The thing about millies is that they're the small pink diamonds that go around the main diamond. They become so expensive and almost impossible to get. Last year we reported that they went up from $800 a carat to $10,000 a carat. Now you can't get them hardly at all. In fact, they offered some in the Argyle Pink Diamond tender, and they sold for a literal fortune. So the fact is that in jewelry manufacturing, the fact is that a lot of the jewelers are on hold because they can't get hold of these small little pink diamonds. That's a sign of the times. It's a sign of what's upcoming. And the fact is, if you're one of the fortunate few to own an Argyle Pink Diamond, I think you're going to make a fortune. In fact, we've invested very, very heavily into the pink Argyle diamond market, and we think it's one of the best investments that we've ever made for ourselves and especially for our clients. So while you can still get them, you can get involved in Argyle Pink starting in and around the $30,000, $40,000, $50,000 range and up from there. It's a very safe investment. We do not feel that they could ever fall in price because there's so few of them available. And also, once the Argyle mine does close, the remaining 5% of diamonds will now become the 100% of diamonds available, and those prices will go ballistic. So, again, judging by what's happening in the marketplace today, judging by what's happening with the banks in Europe, where, again, they are charging you interest to keep your money in the bank. You're only allowed to take out X amount of dollars or they're going to report you for money laundering. It's a different time than we've ever been involved in before. And again, these extremely difficult times and confusing times means that you've got to look at alternative assets, and that's the rare diamond market, the auction market for collectibles like watches and art, the classic car market is on fire. There's a Ferrari that 2 years ago sold for $16 million. It's now back up for sale again for $25 million. Who makes that type of returns in a 2-year period of time? But that's representative of how fearful the paper market is and how much people with money feel comfortable having that money in hard assets. We also have another program that we offer to our clients. We've been in the rough diamond mining business for 3 generations. My partner's family have. They're from Venezuela. They're a very, very wealthy family that has dealt in the diamond market for their entire lives. They're going on 4 generations now that the kids are involved in the business. They own their own diamond mines in Venezuela, and that business is mining diamonds, rough diamonds, and their clients are diamond cutters and polishers that buy rough diamonds, cut and polish them, and sell them to the jewelry trade. It's been a very profitable business for going on 4 generations now. They wanted to increase their business, and I got my clients, mostly my Canadian clients, involved in this business. It's very conservative. It pays very high returns. In fact, it pays returns that are almost unbelievable. We pay 24% a year for 2 years. So for a client, for example, that invests $100,000, they're going to make $48,000 U.S. return on their 2-year investment, and then return of their money at the end of 2 years. We pay every month on the 5th of each month, and the money is deposited directly into your account. A lot of our clients are retired now, and this is a godsend to them, because putting your money in the bank and getting 1 or 2%, you can't live. I mean, what is the point of working so hard your entire life, you know, realizing some form of success, and then having to live eating early bird specials? Is not the way it's supposed to be. If you invest $100,000 in this program with us, you're going to make about $2,500 a month Canadian, or about $2,000 American, every month with us for 24 months. And it's a safe investment because the money that we raised for this investment, what we did is we deposited the equivalent amount of our own diamonds and put it into the trust with the attorneys to assure the principal for our clients that if, God forbid, anything happened to the investment, that our client's investment is totally protected. So again, it's at a time when you're making 1 or 2% return on your money. Now, some clients have asked us why in the world we would pay such a high rate of return when we can borrow money at 3, 4, 5%. And that's a very true statement. And the reason for that is that throughout my career, for the past 35 years, many of the times when I've started new business and new endeavors, it's been my clients that have been with me. They've invested with me, they've put up money with me, and this is my way of returning the thanks and the returns and the help that they've given me over this time. So again, the minimum account for this type of investment is $25,000. It's not for everybody. Not everybody has $25,000 to invest, but some clients have invested the minimum, and some clients have put in 7 figures. Clients that put in $1 million actually get $20,000 to $25,000 a month return on their money. That means that they'll get close to $500,000 return in 2 years on $1 million investment. Most clients invested between $100,000 and $500,000, and again, the returns are extremely substantial. If this is of interest to you, please contact us. We will send you the information and all the lawyers' information from the trust. We'll send it to you. You can peruse it. You can show it to your accountant, show it to your lawyers, and if it's something that you're comfortable doing, we would love to have you as a client. On top of that, the rare colored diamond market is on fire, and it's obvious by what's happening at auction. And just look at the returns that have happened with pink diamonds over the past few auctions. So, again, Randy, at this point, with all the fear in the marketplace today, with everything that's happening with the banks in Europe, again, charging interest to keep your money in there, and then reporting you if you pay too much out in cash, it's a scary time to be in the paper asset market. To be diversified, to have something in diamonds, to have something in art, something in physical gold and silver, maybe own and have fun with a classic car, that's where all the money is going to be made. Why be petrified of keeping your money in the bank and what's going to happen when we know what happened in Cyprus and we know what happened in 2008 when all the markets crumbled because of the derivatives market and the skullduggery that was done in the banking and the mortgage business. So, again, Randy, things have not really gotten better. They've actually gotten more concerning, and now going into this time where the markets are going to slow down, we think it's time to get into alternative assets that are much safer and will give you much larger returns, especially over the longer term.
Speak with Harold about investing in our featured Diamond of the Week from rarecoloreddiamonds.com. And you can speak with Harold personally and privately. He's always happy to talk to you. 1-800-432-1022. Our diamond is a .46 carat heart-cut, fancy, intense purple-pink argyle. This is just a stunning, magnificent diamond. You can see it at rarecoloreddiamonds.com, featured Diamond of the Week. And we had 2 pink diamonds sell at auction this week. Sotheby's Magnificent Jewels and Noble Jewels was on May the 12th, 2015 in Geneva. They had that historic pink that sold, the estimate on it $14.6 million, sold for $15.9. There was also lot 425, an impressive fancy yellow diamond ring, and the estimate on it was $1.6. It sold for $1.8. Lot 337, fancy intense yellow diamond ring from Cartier. It's interesting, a lot of the diamonds, and Harold has been a real proponent of investing in yellow diamonds. A lot of the diamonds were yellow diamonds. Fancy intense yellow diamond ring from Cartier. The estimate on it was $260,000. It sold for $835,440. That was a huge winner. Lot 457, fancy intense yellow diamond ring. The estimate on it, $311,000. It sold for close to $400,000. Lot 377, fancy deep yellow-brown diamond ring. The estimate, $105,000, sold for $307,000. Lot 404, fancy vivid yellow diamond ring. The estimate, $105,000, sold for close to $281,000. Lot 136, a fancy intense yellow diamond ring from Bulgari. The estimate $126. It sold for $154. And there was lot 302, a fancy intense yellow diamond and diamond brooch from Bulgaria in the 1960s. And the estimate on it, $32,000. Harold, guess what? It sold for $134,229. That's a pretty good appreciation on your money.
An amazing return.
You've done very, very well.
Amazing return.
That's a very good result. And then on the other side of things, Christie's had their sale. And their sale was the next day in Geneva. They had that magnificent colored diamond ring set with a fancy vivid pink rectangular cut diamond weighing approximately 5.18 carats. The estimate on it, $10.2 million, sold for $10.9 million. And Harold, we can send these auction results out to those that are interested. They can review them in our free weekly newsletter. You can see stories about the art market this week in New York City, 10 items going for close to $1 billion. There was the Patek watch selling for $5 million. In the past, in our free weekly newsletter, we've had stories about collectible cars selling for millions and millions of dollars. And there was a very interesting quote from David Chapman this week. And it's in the newsletter. In fact, it's right under that article that Harold touched on earlier. David Chapman said, "It has been interesting watching the prices fetched by art and other collectibles over the past few months. The most recent was the sale of Picasso's Women of Algiers, which sold for a record $179.4 million. Art and collectibles have been a hot market. Real estate has also been hot in some countries, particularly Canada. The rush appears to be into tangibles as a place to stash cash. Art, collectibles, real estate have a long history as a store of value despite ups and downs over the years. Both gold and silver also have a long history of a store of value. Could gold and silver experience the kind of price rise that has occurred in the art, collectible, and real estate markets?" And he doesn't mention diamonds, but diamonds, as we know, Harold, as we reported on our show, over the last 10 years had great price appreciation over the last 10 years. And at some point, we really do believe that the gold and silver market will break out along with the other hard asset markets, Harold.
Certainly do. There's no doubt in my mind that it will. Again, we're heading into a time where most people cannot figure out what's going on. It's not when our parents were kids or growing up. You know, the whole financial market is totally different. The amount of debt out there could never, ever be paid back, and that's a frightening thing. And that's why, again, we were so shocked when the Federal Reserve is talking about raising interest rates, because, again, it just doesn't make any sense how they can possibly raise interest rates when the amount of debt, for example, that the United States is carrying, any rise in interest rates would make it more expensive to pay back that debt. So, again, I just don't see how they're going to raise interest rates. And I do believe that if they do try to do that, that will be the catalyst that will send the markets reeling, that could send the stock market back down below 10,000. So, again, they're treading on very dangerous ground. We're saying to be much more conservative. Diversify yourself. We understand that you're not going to totally sell out of all of your paper assets, but once you start to see again and reminded about what happened back in 2008 and 9, again, we start to fear what the potential is when these markets start to fall. And they fell so heavily when the Dow fell from 14,000 down to 6,500, it wiped almost everybody out. It took basically all this time just to get back to break even, and now we're back at a time where it could happen all again. So, again, get the newsletter this week, loaded with great information. It's imperative that we study what's going on so we don't make the same mistakes that we're making in the past.
RareColoredDiamonds.com, featured diamond of the week. We know the Argyle mine is going to be running out here in the next 4 to 5 years. After that, they may have a supply that they've kept in the vaults for a few years. But at that point, 90 to 95% of the world's pink diamonds gone. No new mines coming on site to replace those pink diamonds. So this week's diamond is a .46 carat, hard-cut, fancy intense, purple-pink Argyle. Now's the time to learn about investing in diamonds, hard assets with Harold. at rarecoloreddiamonds.com. You can speak personally and privately with Harold about the featured diamond by calling 1-800-432-1022. And one of the great things about diamonds is the history behind them. And let's touch on just very briefly the history of that 8.72 carat pink diamond that sold at auction for $15.9 million at Sotheby's. They called it the historic pink. Only recently resurfaced after sitting in a bank vault since the 1940s. Think about it. Someone had it stashed away. A buyer was not disclosed by Sotheby's. The vibrant cushion-cut diamond is considered extremely rare. It was sold as part of the auction's Magnificent Jewels and Noble Jewel sale. The princess, and it belonged to Princess Mathilde Bonaparte, and she was the niece of Napoleon I and a relative of King George II and the Tsar of Russia. She amassed a collection of pearls, diamonds, and other jewelry, considered second only to the collection of the Empress Eugenie, the wife of Napoleon III, according to Sotheby's. Now, Mathilde died in 1904. The pink diamond was believed among her jewels auctioned in Paris in June 1904 and later acquired by William Andrews Clark Sr., a U.S. senator, industrialist, and entrepreneur who died in 1925. Now, after his death, the stone passed to his daughter, Huguette Marcel Clark, who died in 2011. The diamond is also considered a prize for its cut, a classic non-modified version of the cushion. The auction house considers the market for colored diamonds and other precious gems strong, and pink diamonds among the rarest. In fact, in October, Sotheby's sold a pink diamond for $17.8 million. But I just love the history behind diamonds, Harold, that have been passed down from generation to generation. When you get into the historic diamonds, as the diamonds you feature, they are museum-type pieces. This is a museum piece a diamond, and it's nature's art. And it's something you could go into a museum anywhere in the world and be very happy to view. And just the story behind it is just totally amazing to me. We have about 3 minutes left.
It certainly is. And if you want to learn the history of diamonds, go to our website, rarecoloreddiamonds.com. Just loaded with information. But we do online seminars, and they're totally free, and you can do them from the comfort of your own home. And the seminar that we offer tells you everything that you need to know about diamonds, how to read a GIO report, what diamonds are worth more, how color affects diamonds, how clarity affects diamonds. We show you a video on how diamonds are cut, and it takes about an hour to watch. We can actually email it directly to you, but it will give you the information you need in order to make the right decision. And that's what we want you to do. We want an informed client in order to have the client understand what this investment is all about. It's actually fairly simple, but it's one of the most amazing investments you can make, especially with the Argyle mine closing down. So, again, this is an opportunity that I doubt we will ever have again, because there is no mine in existence that does what the Argyle mine does, which is produces 95% of all the pink diamonds in the world. Once that mine closes, we will never have another opportunity to take advantage of the situation that we have right now.
I guess it's really not a surprise to see those that are wealthy moving into hard assets. Global debt now around $200 trillion. The wealthy, the multimillionaires, billionaires of the world are moving into hard assets to protect themselves. In fact, we touched on it earlier, unfunded pension liabilities for Illinois, the public retirement system in Illinois, $104.6 billion. Absolutely stunning. And it all culminated this week with 10 pieces of art sold in New York for close to $1 billion. A Picasso sold for $179.4 million. And we also had a Patek watch selling for $5 million. Over in Geneva, Switzerland, we had the historic pink diamond selling for $15.9 million. And then we had another pink diamond selling for over $10 million. It was $10.8 million. People are turning to hard assets. And if you would like to learn more about investing in hard assets, go to rarecoloreddiamonds.com. rarecoloreddiamonds.com, and take a look at our featured diamond of the week, a .46 carat hard cut fancy intense purple, pink argyle. Speak with Harold about the diamond, 1-800-432-1022, or connect with him at rarecoloreddiamonds.com. And Harold, have a great long weekend, and thank you for another great show.
It's my pleasure. I wish everybody a wonderful long weekend. Enjoy the hopefully great weather, and have a very profitable day.
That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.